If you're watching this video, I'm assuming you're a returning Roth IRA investor ready to kick it off for the new year, or you're a beginner investor who knows you want to invest in a Roth IRA but don't know exactly where to start. Either way, you're in a great place because I'm going to be maxing out my Vanguard Roth IRA right in front of you. I wanted this to be an educational walkthrough, so I'm going to be sharing my screen and talking all things you might come across regarding Roth IRAs, including the fact that less than 20% of individuals aged 15 to 64 have an IRA, and I'm all for bumping that percentage up. The earlier sections of this video will be about what a Roth IRA is, why you'd want one, and why I choose specifically to have my Roth IRA with Vanguard, while the later parts of this video will be more so about just me sharing my screen and actually going through the Vanguard interface, which is, fair warning, not the most user-friendly website. I myself feel like I have to relearn the website every single year. If you're looking to do a specific thing on the interface, feel free to just fast forward to that section of the video. I'll have timestamps below. And if this video doesn't cover the particular question you're looking for, just leave a comment and I will get back to you. And with that said, let's get into it. Quick disclaimer. I'm not a financial advisor and this content is for educational purposes only. Always do your own due diligence before making any financial decisions. So what is a Roth IRA and why do I have my Roth IRA specifically with Vanguard? Well, an IRA stands for an individual retirement account, and it's the US federal government's way of incentivizing people to save for retirement. And the great thing about IRAs is that you get all of these tax benefits when you have an account and invest in your IRA. There are two types of IRAs. There's a Roth IRA and a traditional IRA. And the biggest difference between these two is when you're being taxed. So for a traditional IRA, you are contributing money tax-free into your traditional IRA, but then when you eventually withdraw that money when you're retired, you will pay taxes then. Whereas a Roth IRA, you're contributing after-tax dollars, and then when you withdraw that money from a Roth IRA, all that money is tax-free. So the biggest difference is when you're paying taxes, whether it's during contributions with a Roth IRA or during withdrawals with a traditional IRA. I've personally decided to go with a Roth IRA over a traditional IRA because I wanted to pay my taxes now and have that large nest egg that's tax-free when I do retire. There are discussions about, a lot of this will depend on if you think taxes will be higher in the future than it is now. There's also a lot of other considerations like how much you'd be making when you're retired or versus now, and also what state you'll be in because withdrawals might be taxed less in certain states. But for me, I just like to diversify when I'm paying taxes. So I'd just rather pay all my taxes now when I don't make as much as I would in say 10, 20 years, and then have that large nest egg to draw in retirement. So with a Roth IRA, you do contribute after-tax dollars. This means that your employer or yourself will send money to your bank account that already has taxes withheld. And then with those dollars in your bank account, you can transfer them to a Roth IRA because those are, after-tax dollars. You've already paid taxes on them. And the great thing about Roth IRA is that your earnings grow tax-free. And then you can also withdraw any amount from your Roth IRA tax and penalty-free as long as you're over 59 and a half years old and have had the Roth IRA account for over 5 years. If you don't meet any of those two requirements, you will be paying a hefty penalty when you withdraw your earnings. But a great thing about a Roth IRA is that you can actually withdraw your contributions at any point tax and penalty-free. So if you contribute $6,000 this year, and say in 2 years you make an extra $1,000 because your investments are great, that means you've contributed $6,000 and you've had earnings of $1,000. So you can withdraw that $6,000 at any point in your lifetime, tax and penalty free, but if you start to withdraw that part of the $1,000 of earnings, you will be charged with a tax and penalty. I myself don't think of a Roth IRA as an emergency fund, and I you probably shouldn't either, but it is great to know that you can withdraw contributions from a Roth IRA if shit hits the fan. So why do I have my Roth IRA specifically with Vanguard? One of the reasons is because Vanguard has led the charge in low-cost index funds. Vanguard founder Jack Bogle invented index funds with the philosophy of growing with the market rather than trying to beat the market. I myself had my fair share of picking individual stocks and hoping that I've selected winners that will outpace the market. But over time, I realized that no one really knows what will happen with the stock market, especially in times like these when the economy is kind of in turmoil and a recession may happen. I myself have no idea what will happen with the stock market, but I sure as heck can grow with the market. But even with all of these stock market crashes and recessions, we've seen the stock market go up time and time again. So in the long term, I'm not going to try and beat the market. I'm just going to grow with the market. I can't control the stock markets at all. And as an investor, I just want to grow with the market. The only thing that I do have control over is the funds I invest in and the fees I pay for those funds. And Vanguard has plenty of low-cost index funds. But truthfully, there are other companies that provide index funds that have lower costs than Vanguard. But another reason why I invest specifically with Vanguard is because the company operates much like a nonprofit. The company is owned by its funds, and the funds are owned by the company's shareholders, us as investors. So we are both the true owners and clients of Vanguard. And because of that, we know that Vanguard will always have our best interests in mind and not some other third-party private investor. Why wouldn't you invest with Vanguard? One of the drawbacks with Vanguard is that the analytics is somewhat lacking. You won't find up-to-date, live, day-to-day information about stock prices and how those are fluctuating. But honestly, the Vanguard interface was designed for long-term investors. The interface is quite complicated and clunky, and it's hard to find things you specifically are looking for. But I only use the Vanguard website once or twice a year, and don't mind having this feature of clunkiness because it actually helps me avoid using the website and going on every single day. Which, back when I was heavily investing in individual stocks, I would check the stock prices daily, and it was really an unhealthy use of my time. What qualifications do you need to open a Roth IRA with Vanguard? For one, you need to have earned income from an employer or yourself if you're self-employed. Two, you have to have a qualified income level, which I'll get to in a second. And luckily, there are no age restrictions to have a Roth IRA. You do need to be a US citizen and have a US mailing address to open an account with Vanguard. If you live or work outside of the US, refer to their international page. I won't be opening an account in this video, but if you do want a step-by-step walkthrough of opening an account, I'll go ahead and link my old Roth IRA video in the description below. There are important things to note when contributing to a Roth IRA, because if you're watching this video when soon after I've posted this, you can contribute to either the 2022 year or the 2023 year. If you haven't made contributions or you haven't maxed out your contributions for 2022, you can still contribute into your Roth IRA for 2022 until the tax filing date of April 18, 2023. And at this point in time, it's past January 1st, 2023, so you can make Roth contributions into your 2023 year. There are some Roth IRA changes you should know for 2023. The US federal government has upped their contribution limits for Roth IRAs, and first time that I've seen them up it in a really long time. One reason for this is probably because inflation has gone at all-time highs, where they peaked at a 9.1% increase in June of 2022 for a 12-month time span. The contribution limit for a Roth IRA has increased from $6,000 in 2022 to $6,500 in 2023. On top of this, the income phase-out range for Roth IRA contribution eligibility has also increased for taxpayers filing single, head of household, or married filing jointly. Meaning, if your modified adjusted gross income, or MAGI, is above a certain dollar amount, the amount you can contribute to a Roth IRA will be less. And here's a good page from Charles Schwab that outlines the amount of contributions you can make depending on your MAGI. So now I'm going to share my screen and walk you through the Vanguard interface while I max out my Roth IRA. All right, so let's go ahead and go to the Vanguard website. So just vanguard.com. And then here you can go to personal investors and log in. All right, so if you haven't been on Vanguard in a while, you can see that the interface has changed quite a bit. I hadn't been on Vanguard for over a year, and the interface is a lot more sleeker than it was before, and I have high hopes for this company. And right off the bat, you can see the total money you have in your accounts. I only have a Roth IRA account, and that's what I have right here. And if you go into your holdings, you can see exactly what you have. Now let me scroll down here. But before I talk about all of the mutual funds that I own, spoiler alert, there's only 2, I wanted to talk about what this settlement fund is, because it does trip up a lot of first-time investors. And a settlement fund is basically just a placeholder for your money on the Vanguard interface. Whenever you transfer money from your bank account to Vanguard, it goes into this settlement fund. And from there, you can take that money in your settlement fund and use it to invest in different stocks, funds, or bonds. Likewise, the other way around, when you sell your investments, that money will go into your settlement fund. There's really no reason why you would want to store a ton of money into the settlement fund unless you know that you're making an investment in the near future. My settlement fund is always 0 because now I invest directly from my bank account to the specific Vanguard funds that I've chosen. I only have 2 funds that I invest in, and it's VTIAX, which is Vanguard's Total International Stock Market Index Fund, and then I have VTSAX, which is Vanguard's Total Stock Market Domestic, so just US, the index fund for that. I'll briefly go over what these 2 funds are, but I do have a more in-depth video about these that I'll link in the description. So VTSAX is Vanguard's Total Stock Market Index Fund, and it essentially holds the entire US stock market. And if we go into Vanguard's analytics, we can see exactly what they have. You can go to what we offer up here, mutual funds, and then look at the various index funds that Vanguard has. Or you can be lazy like me and then just search VTSAX. If you don't know what an index fund, it's essentially just a basket of stocks that track a certain index. And in VTSAX's case, it tracks the total US stock market. Now, a lot of people will say index fund and mutual funds almost interchangeably. Technically, this index fund is a mutual fund that Vanguard offers, but when people say index fund, they typically mean low-cost index funds, which are just mutual funds that don't have a large expense fee. In most mutual funds, you can find that the expense ratio could near 1%, whereas a low-cost index fund is a mutual fund that has a very small expense ratio. And Vanguard has a lot of funds that are just like this but track different indexes, such as the top largest 500 companies to the tech sector, real estate, etc. I won't go into too much detail here, but VTSAX does have a requirement of $3,000 to get started investing in this fund. But if you still wanted to invest in the total US stock market, you can invest in the ETF version of this, which is called VTI. So I'll pull that one up as well. I knew I wanted to have my investments in the Admiral share because that will allow you to set up automated contributions and dividend reinvestments. Unfortunately, with ETFs, you have to buy stocks as a whole. So right now, the market price is $195. So you need at least $195 or multiple of that to invest with VTI. You can't set up fractional shares or dividend reinvestment. So what I did starting out was I put my money in VTI until I had that $3,000 minimum, and then I just sold these shares and bought VTSAX. Now, the other fund I have is VTIAX. This index fund tracks the total international stock market for major companies. This fund also has that $3,000 minimum with a slightly higher expense ratio. Which, by the way, if you don't know anything about expense ratio, it's basically the fee that Vanguard takes to manage this fund. So if this fund actually grew 10.11% in the past year, Vanguard would take that 0.11% and you would see an increase of just 10%. So you don't have to worry about paying this or managing it at all. Vanguard will just handle it for you. If you scroll down here, you can see exactly what is held within this fund. Because this is an international fund, it won't have US companies in this, but the majority of the fund is within, Europe, the Pacific, emerging markets, and North America, aka Canada, Mexico. Here you can see the breakdown on the different regions within this fund. Because it is an international fund, it doesn't have US companies, but I think it's cool to see what part of the globe that this fund is composed of. If you click on markets, you can see specifically that Japan has the most weighting in this fund, followed by United Kingdom, China, Canada, etc. And if we scroll down, let me go back to regions. If we scroll down, we can see specifically what companies are in this fund. These are weighted by market value, so percentage of this fund. The first one is the Taiwan Semiconductor Manufacturing Company. Then it's Nestle, ASML Holding, and you can go ahead and see if that interests you. The ETF equivalent of this index fund is VXUS. This is Vanguard's ETF version, and it also tracks the total international stock market. So same thing, when I didn't have $3,000 to invest in the international fund, I just invested in this ETF until I reached that $3,000 and then started investing with VTIAX. You may be wondering why invest with international stocks at all, because if you look at VTSAX versus VTIAX in the past 10 years, the US market has creamed the total international stock market by a ton. So everything's in the red now, but over the past 5 years, we can see that the VTSAX has grown 36%, whereas VTI in the past 5 years has grown negative 8.7%. Not a good look. But BlackRock has this article that does depict why you would consider doing internationals at all. Investing hasn't really been accessible until recent years, and we oftentimes forget how the stock market behaved in the past. And a lot of the times when the US stock markets are down, the international markets will outpace it. So according to BlackRock, the US has outperformed roughly half the time the international stocks have. And looking at this chart, the US has outperformed international stocks 8 out of the last 9 years and 10 out of the last 12 years. So you could be like, okay, the US stocks are outperforming international. Let's just go with VTSAX. But there are times in the past where the international stocks have outpaced US stocks. This bout between 2002 and 2007, 93 to 94, and 1983, 1988, and a few others in the past. You know, past performance of a fund does not indicate how it'll perform in the future, and I wouldn't want to miss out on an international run if that occurs. If you're wondering what else I'd consider in my investment portfolio, honestly, I would be okay with just having VTSAX and completely scrapping the international funds because due to globalization, a lot of US companies are by definition international companies. They do business overseas as well as in the States, and they're closely tied with the markets in other countries. I'd also consider any other low-cost index fund that Vanguard offers. If you go to this section of Vanguard, I like to go to investment style, management style. Active funds will typically have those higher fees and are your more traditional mutual funds. Index funds are those passively managed ones that have low expense ratios. Honestly, I could probably pick any of these and be okay with it. You can make a combination of any of these, but keep in mind if you are investing in, say, domestic only index funds, you're just going to be rebalancing the weighting within VT-SAX. And what I mean by this is that VT-SAX covers every sector in the US market and every size company from small to mid to large cap companies. So say you make a portfolio that contains VFIAX, which is the Vanguard's S&P 500, the largest 500 companies within the US, and you do something like the tech sector, VITAX. Essentially what you've done is you've taken VT-SAX, scrapped out the small and mid companies, and then threw in more shares of tech companies within it. This is a great way for you to have a more personalized investment philosophy. Say if you wanted to, you have more faith in tech and healthcare, you can weigh your portfolio towards those two sectors. And the great thing with a Roth IRA is that you can actually change this up. You can just sell all of your shares of VT-SAX and switch to a different fund and switch every year if you wanted to without any penalty, because within a Roth IRA, you aren't going to be paying any taxes. Now I'm actually just going to go ahead and invest my money. Now I'm just going to go ahead and contribute to my Roth IRA. All right, so let's go back to my account. If I could, I would totally contribute the max $6,500 right now. But I've had a recent medical bill and I do expect large future expenses. So I'm only going to be contributing $1,000 for the month of January and then $500 a month. And by the time December rolls around, I will have contributed the max to my Roth IRA. And something cool here is that in my performance, I can actually see my contributions and growth of my Roth IRA. Back then, I would contribute on a monthly basis, so I'd contribute $500 a month. In 2020, I contributed $2,000 3 times to max out my Roth IRA then. I mean, here you can see that in the most recent years, I've just gone ahead and maxed out my Roth IRA at the beginning of January, $6,000 one year, and then another $6,000 the next. This is because statistically, it's better to invest all of your money now than to do it over a span of time. This is because the stock market will generally go up. In times of turmoil where the stock market can look a little shaky, if it does make you feel better to spread out your investments over a certain time frame, then definitely do that. Do whatever you need to do to actually get yourself to invest. All right, so I'm gonna go to here and I'm gonna click buy funds. I'm gonna contribute to my Roth IRA. I'm gonna contribute both. Well, I'm gonna contribute to both of these funds. And my split is a 80-20 split. $800 to VT-SAX and then $200 to VT-IAX. and I'm going to choose to invest from my savings account, and I'm going to contribute $800. So I'm contributing to my Roth IRA. I'm buying VT Sachs, $800 worth, and I'll submit the order. I'll go ahead and place another trade. I'm going to invest in VTIAX, $200 there. My Capital One savings, $200, and contribute. And this will take place in effect as soon as it can the next day when the markets are open. This one's a little bit more tricky to find. Here you can scroll down to frequently requested links and set up automatic investing. That'll lead you here. So I have my Roth IRA here, and I've already contributed $1,000 just now. And so I have to contribute $5,500. So I'm going to contribute for the year 2023. And I'm looking to maximize my annual IRA contributions. If you click this, they'll go ahead and figure it out for you. So I'm going to be contributing from my Capital One savings account. I want to do it every month starting on, so I've already done January. I'm going to start on February 1st, so the 1st of every month. And you can see here it's $500 per month. Allocate my investments by, I could do equally or by percentage. I'm just going to go ahead and do it by percentage. So I want to do international stocks are 20%. Total US stock market is 80%. And that's the contribution that I'm happy with and will be for the longest of time. If you can't max out your Roth IRA, it's okay. Just start out small and start out with what you can. When I first started, I just contributed what I could. If you can only contribute, say, $100 a month, that's a fantastic start. Last but not least, let's set up DRIP, which stands for Dividend Reinvestment Plan. Every quarter, companies will send its shareholders dividends as a reward for investing with them. But as a long-term investor, we want those dividends to just automatically be reinvested into the funds we have. So if we go to my accounts from Account Overview, this one is a lot more trickier to find. You can search or scroll all the way down to Dividends and Capital Gains. Click there. And we want to change distribution elections. So I've actually already set up my dividends to reinvest for both of my funds. But if you haven't already done so, click Change Elections. Click your dividends to reinvest. Check the boxes you want them to reinvest. Continue. And it's giving me a warning that, I haven't really changed anything, but for you, it should submit, and then you should see your dividends set to reinvest. If you had these funds in a taxable brokerage account, you would be paying taxes on those dividends. But since it's in a Roth IRA, you're free and clear, you aren't paying any taxes. Let me just show you that the dividends do reinvest. So we go to Vanguard, Personal Investors. It looks like I'm going, okay, so I'm already logged in. Let me go to my account overview. And in my activities, you can actually see my dividends being reinvested. So in December, I had 2 dividends, one for the total US stock market, another for the total international stock market fund. And my dividends were reinvested back into those funds, which is pretty neat. We know it's working. That pretty much covers all I do with my Roth IRA. Ideally, I just go in one time in January, max out my Roth IRA, and be done until the next year. I just focus on living life, saving up enough money for my investment goals and life plans. Aside from my Roth IRA, I do invest in a couple of other places. I invest in my employer-sponsored 401k plan. I invest in a HSA, which is a health savings account. I invest in a taxable brokerage account, another one specifically for cryptocurrency, and in the future I plan to invest in real estate. I'll link some helpful videos I made on those topics in the description below. I hope this has helped you. If you have any questions on Vanguard or Roth IRAs or anything really, leave a comment below and I will get to it. Peace.